0.5% higher on the Nifty. We've actually built on the kind of gains that we saw at probably the first hour or so of trade, and we've really steadied ship, in terms of the kind of pressure that we're seeing right at the start of trade. 24,133 got tested. We're now 200 points, nearly 200 points above that. So that's one of the key positives that's playing out in markets. I'm going to quickly take you through the Nifty, and in terms of the advanced decline, it shifted materially. We're now seeing 37 advances to just about 13 declines on the Nifty 50 index. So you're seeing the breadth getting sharply positive. You're seeing HUL, Nestle, some of even Asian Paints, for example, doing fairly well in trade. Those are some stocks for you. 4.5% high on HUL, Nestle up 2.1 odd percent. Even and Asian Paints is up 1.5%. Power Grade, Reliance, JSW Steel, Apollo Hospitals are just some of the other gainers. But FMCG is one of the set of stocks which is shining in trade today. Wipro, HDFC Life both came out with numbers. Both stocks down over 2% in trade. In fact, the only stocks down over 2% in trade on the Nifty 50 index. Clear disappointment visible, at least on both of those counters. We saw a bit of a run-up with regard to HDFC Life, so seeing a bit of a cool-off thereafter. But Wipro, clearly, the disappointment is evident on the Nifty IT index itself. 0.25% lower on the Nifty IT index. HCL Tech, Persistent, Infosys, Coforge, some of the losers within the Nifty IT pack. The top gainer, though, on the Nifty IT pack is Oracle and Tech Mahindra. Both of those are doing relatively okay on an otherwise tough day for the sector as a whole. Let me also talk about some other sectors. FMCG up 2.5%, no surprises there. The Nifty Energy is up 1.6%. The Nifty Realty is up 1.2%. The Nifty India Defense Index is up 1% odd, and the Nifty Metal is the other one, which is gaining around 1% or so in trade. When you're looking at broader markets as well, 1% higher on the Nifty Midcap, 1.5% higher on the Nifty Small Cap. So you're seeing decent gains across the board. In terms of stocks which are really standing out in trade, you're seeing a Galantis part which is down 4%. But the kind of run-up that we've seen on the stock, thereafter we're seeing a bit of a cool-off. Wipro and HDFC Life among the top 5 Nifty losers on the Nifty 500 basket. So that's clearly showing that the negatives are far and few in a market like this. 100 declines to around 400 advances, what we're seeing on the Nifty 500 basket. Angel One is one of those top gainers. MMTC, GSPL, these have been gainers from the start of the day. So it's not something that we've seen a spurt on any of these stock prices. Cohance is up 8%. Aegis Logistics, Shipping Corp are just some of the stocks which are doing very well in a market like this. Ola Electric also and Radico also, both of them up 6% plus in trade. Let me go across to Karan. He's here with the list of stocks that you want to keep on your radar on the back of corporate announcements that have come through, but also some of the other pieces playing out in the market. Karan, over to you.
Let's start off with Apollo Microsystems. The company has been granted a license by the Government of India for the manufacturing of ammunitions. Let's try to understand what this development entails for the company. This transforms the company's revenue architecture and strategic positioning. On that note, the company now moves on from being a provider of systems to an end-to-end platform manufacturer. On that note, the company's order book stands north of around 1,300 crores with a book-to-bill of 1.7 times the trailing 12-month revenue. And remember, the management had earlier guided on a greater than 35% annual revenue growth for the next 3 financial years. So do watch out for Apollo Microsystems. Followed by Engineers India, the stock is up on the back of the volumes being 9 times the 20-day average. And the company's order book stands north of 14,000 crores. Waaree Renewable is also in focus on the back of its Q4 earnings, with a strong unexecuted order book of 2.8 gigawatt peak and a timeline of 15 to 18 months. While the company has met its margin guidance by staying above 15%, the company works on fixed price contracts and it generally does not pass through the hike in input costs to its customers. So do watch out for Waaree Renewable Tech. Asia Infra is also in focus as the company has received the license from Jalandhar Development Authority for development of a new housing project. L&T Technology Services has partnered with a leading global energy major to be its engineering services and technology partner for its digital expertise center in India, and that will house more than 500 engineers. Kolte Patil Developers is also in focus on the back of a strong Q4 operational update. The company has reported record realization of rupees 9,600 per square feet, and that is up 21% year on year. And finally, we have Gujarat Gas in focus. Nomura is out with a report on Gujarat Gas, upgrading the rating to buy and maintaining the target price at 390, and that entails an 11% upside potential. The LPG shortage in India has also prompted the government to announce a new framework. Now, this could serve as a long-term tailwind for PNG adoption in India, thereby supporting the company's gas volume expansion.
Okay, thank you so much for that, Karan. Apollo Micro, that's the one that's really standing out in trade, getting the license to manufacture ammunitions, and that stock is up and away in trade within that defense basket, 16% higher on that win. But let me bring on board Kunal Bothra, as always. Kunal, great having you. Let me first start off with what you make of the kind of day of trade that we're having today. We started off on a slightly negative footing, but we've recovered very, very well, and we're sustaining that. And what are the levels that we're open to now? 24,500, is that something which is realistic to look at?
Yeah, 24,500 is a realistic number which we may look at. Today is a very surprising move, I will say, from the larger cap peers, because there are so many large cap stocks, which are starting to show signs of strength. You mentioned few of them like Reliance Industries, etc., which I think for a change, I think has been looking quite strong throughout the day. So that probably indicates that maybe we are looking at many of the underperforming stocks trying to make a comeback for themselves in the Nifty 50 basket. And that could probably aid the move for the index on the higher side. We generally believe that when the index nears into a strong psychological breakout, it heads into the second rung breakout zone. In this case, it should be at 24,500 mark for the Nifty. But I also sense that if this pattern which you're seeing today, where the market breadth has not just opened up, but the larger cap peers have started to look attractive, if this trend sort of persists for maybe another few days, then we may be looking at even potential possibility of 25,000 on the Nifty in the near term.
Okay. And how quickly do you pencil that in, Kunal? 25?
So I think if it has to happen, it has to happen next week itself, because of course the base assumption for all of this is that there is no negative news flow on the weekend. But I sense that with the kind of positioning which the markets are showing right now, the major effect of that is, on the daily charts, for example, for the Bank Nifty, we are actually seeing a death crossover where you're seeing the 50 DMA crossing below the 200-day moving average. Now, in a pure technical parlance, it's considered to have a negative connotation for the banking index. But in this case, since we have recovered quite well from the lower levels, there is a possibility that this average could reverse itself very, very quickly. And for that to happen, the pace of rally has to be very quick over the next few trading sessions. So that's why I would pencil in that potentially over the next 1 week, the markets could probably try and maybe head towards a dash around this 24,500 to 25,000 mark also on the Nifty.
What's the sector tilt, Kunal?
Today, of course, I think it's FMCGs which is taking the shine, but I would still believe that go with the ones which have performed very well, whether it's the power names you're looking at, whether it's PSU as an index, PSE as a sector index which has done remarkably well for itself. Metals have done reasonably well. Real estate stocks, I think they've been phenomenal in terms of the price gain. I think the last I'd seen for metal, the real estate index, they were up some 16% or 17% from their recent swing lows. So it's frankly plenty of sectors to choose from. Even if you want to look at individual large cap names, I would still believe the likes of L&T, for example, looks fairly attractive. The stock seems to have gone through a very mild kind of a correction around the 4,000 mark. That's another name to watch out for.
And what's your stock tilt, Kunal?
So I'll go with two buy calls. The first one which I would suggest would be a buy on OFSS, Oracle Finance. Now this is the only few mid-cap IT names which is actually looking extremely attractive, very consistent with the price trends and the patterns over the last many weeks. And would suggest the buy with a higher target of 8,200. Stop loss could be kept at 77.50. The second would be buy on NMDC. Now this is a very interesting chart because it's coming out of after months of major consolidation. The stock has been stuck into a range of around 87 to 88 on the higher side as a resistance, showing a lot of evidence, good volume patterns, excellent built up on the options front for NMDC, which could probably give us a precursor indicate that the stock is heading towards a breakout. So we'd look at 96 as a near-term target for NMDC, stop loss to be kept at 86.
Okay, what we'll do is slip in a very short break. On the other side, we'll start talking fundamentals, trying to get a sense of what to look for in a market like this from a fundamental standpoint. Stay with us. And let me bring on board Merrill here with all of the stocks that you want to keep on your radar. Karan got us the first set, Merrill here with the second.
Yes, coming to you with a list of stocks that we've seen buzzing in trade today. Starting first with Bajaj Consumer Care, which has posted a really strong set of fourth quarter numbers. Revenue came up around 30% on a year-on-year basis, while EBITDA more than doubled. And we've also seen EBITDA margin seeing a massive expansion, over 1,000 basis points. Their growth portfolio this quarter around crossed 200 crores in sales, and the management expects this to cross over 500 crores in sales over the next 3 years. Next up, CRISIL as well has posted a strong quarter. Their profit was up nearly 46% on a year-on-year basis, while revenue rose more than 30%. CRISIL has also approved its first interim dividend of 9 rupees per share, so that's an interesting one to watch. Moving to the infra space, RVNL is in focus after being selected as the lowest bidder for a project worth 970 crores, which is a 3-year contract. And finally, Gujarat Gas is on the radar after Nomura's released a report double upgrading the stock from a reduced rating all the way up to a buy rating. And they cited the emerging tailwinds from the US-Iran conflict, which is actually bolstering support for Gujarat Gas. So yes, these were a few stocks that we've seen buzzing in trade today. Back to you.
Okay, thank you so much for that, Merrill. Let me go across. We're joined by Christy Mathai, Fund Manager Equity at Quantum AMC, joining us this afternoon. Christy, very good having you. How are you viewing a market like this? What are you finding interesting? Give us a sense.
Yeah, hi. Thanks for having me. So when we look at the market at the current juncture, so clearly, some of the stocks over the past 2 months have clearly become attractive in that sense. So if you were to look at our portfolio and how they stack up, 2-3 years out in terms of upsides, that is looking definitely better. But on the flip side, you also have this, headwind of input cost across the board being very high. And, some of the crude linked products have moved pretty sharply. So our view is, while we have, it is, this situation is much better compared to last week. There is some ceasefire, etc. But this is a headwind to earnings that you would see in the first half. And, if this prolongs, FY27 earnings could be at risk to some extent. So that is what makes us a bit cautious at the juncture. If you are a long-term investor with, these situations will normalize. So you should possibly be looking to take advantage at this point in time of the prices.
Okay. Therefore, Christy, how are you looking at valuations at this juncture? Give us a sense of that on the Nifty first to start off, and then maybe we'll go sector-wise. Given this West Asian war, what's the kind of impact that you're penciling in with regard to the Nifty FY27 or FY28 for that matter?
Right. So we do not have a view on Nifty as such, but we do have on our portfolio stock. So when we look at our portfolio stock, we do some sort of sensitivity that is crude at, certain prices and what if it prolongs. So there we are, if you were to do that math, there is clearly a hit in terms of EPS that can accrue over the next, couple of years, because there is a rolling effect of FY27 earnings. And to that extent, the valuations sort of across pockets have not corrected. Nifty PE, of course, has come down. It used to be around 22 10-year averages. It's somewhere around 19.4 round. So there is a correction that has happened. But a lot of that is also driven by a substantial portion of the index, such as IT services, such as, banks, trading at a very premium valuation compared to its long-term, lower valuation compared to its averages. So that is why, we should not really look at Nifty to get that sense. It has to be more bottom-up because, large component of the index is trading pretty cheap. Some portion could be still expensive from that point at this juncture.
Right. And Christy, talk to us about that a little bit more. So even within the financials, there's PSU versus private versus AMCs versus insurance. Where is it within that financials value chain that you're seeing the most value, and all of them trade at a decent discount versus what they used to trade at? So where is it that the best value is coming out from?
Yeah, so apart from, maybe I'll come to bank in a while, but we find some of these private insurers, especially on the life side, now trading at significant discounts to its long-term averages. There has been certain developments which is most regulatory in nature. For example, GST correction has to be sort of passed on in some of these fashions, so that has impacted the growth to some extent, the surrender value some time back also. So there was a headwind mostly driven by regulatory aspects which impacted some of these life insurers. Now we have sort of come to value some of these companies. They are, they have not given any returns over the last 5 years. So from that point of view, the valuations have become pretty attractive in some of these portions. So we are looking fairly closely at, life insurers. We do have some allocation, possibly thinking, can there be more value? The other opportunity clearly from our side is, of course, the banks. We have seen the credit growth data. It is, close to about 15-16%, which is one of the highest that we have seen in several quarters. Even the deposit number sort of inching up. Now, there could be a year-end aspect to it because, because of the war, there could be certain working capital loans which would have moved up, or you would have some, NBFC moving to banks as opposed to issuing NCDs and so on and so forth. That would have helped. But we think it is pretty healthy. And if some of this were to sustain, we should see that earnings accrual for the banks coming through in the FY27 and possibly FY28. So that is our larger bet. And apart from that, we do have some allocation to, let's say, AMC stocks, which, to our mind is not very attractively valued at this point in time. So that's broadly the financial pack for us, how we are looking at it.
Right. And some of these numbers, the likes of HDFC, ICICI, if at all there could be a negative surprise, where would that come from? Because just having a conversation and not able to figure out if there is a negative surprise, where will that come from? And if so, are we only looking at a slight positive bias to those numbers, if at all? That's the way to think of it?
Yeah, so clearly, I think the street is looking at the margins. It is, and maybe to some extent, at least the credit cost, which has been where it is. So I think the numbers that people are really tracking is the margins at this point in time, because we have seen the growth come through, and possibly the deposit growth also to that extent come through. But we need to look at what cost has this come at. So that is where things are. And of course, possibly we've had a tailwind of trading profits, treasury profits in the first, earlier part of this year. But now some of that is fading. And, if you were to look at the public sector bank, we think that could also be a headwind going ahead, because now slowly what will happen is the credit cost also will normalize. We have had almost 2 to 3 years absolutely credit cost being extremely benign. But when that happens, the ability to price loans at such finer prices, especially by the public sector banks, may be a bit difficult. So that might impact the growth. So that is how we are looking, at these numbers at the juncture.
Okay, interesting. Christy, let's venture into some of the other pockets, especially within the mid and small cap. Say a realty, for example. What's the take there? Say metals. What's the take there? Any interesting buys over there, or has the kind of run up in metals maxed out in terms of the earnings compounding for maybe the next year or so?
Yeah, so realty is a pocket of opportunity for us. So we have been sort of fairly well deployed in that pocket. We have used the correction that we have had in the past month to deploy into some of those names, because again, we think valuations have clearly sort of bottomed out in some of these packs. And what we have seen over a cycle is, while there could be a temporary slowdown, and some of these larger real estate names which have a cost of fund benefit, there is a benefit in terms of where they could raise money from. So their execution track record sort of really improves, in this consolidation phase within the real estate sector. So we have, we think some of those are trading attractive. So we added to a very well diversified group within the real estate pack. So metal, the prices have really firmed up. Again, if you were to look at the import issue, which was a problem some time back, what we have found is, the domestic prices have firmed up, and some of these input costs that are required, the freight cost or the input that are required also have moved up. So to that extent, the pricing is really helping the metals pack at the juncture. So in our view, as long as things continue the way it is, possibly the prices could be where it is. But there is not enough valuation comfort within the metal pack at this juncture. So we do have some exposure, but we may be using this, move to sort of trim or sort of keep our position where it is.
Consumption, Christy?
So within consumption, we do like consumer discretionary as a primarily autos. So the benefit of GST has really sort of helped. If you were to just look at the auto numbers, even the current wholesale numbers, the month gone by has been extremely strong. So clearly now our sense is it is a time for us to be selective within that pocket. So we used to have a very large exposure both in the forms of two-wheelers. We almost owned the top 3-4 two-wheelers that we have. So we have sort of slowly trimmed our allocation there, primarily because we think now the input cost issues might sort of play out, and the valuations have really moved up. So in this pocket, so there could be some sort of softening from our perspective. So we are fair bit allocated to that, but these are some of the headwinds that you might have to look. And the traditional consumption themes that we look at, we are not present there primarily because we think, although, over the past 9 months, there has an improvement in terms of, let's say, the volume growth for some of them. But we still think the valuations are not where it is to justify that sort of 7-8% growth that you see in the pack. We like consumer durables, which had a poor year last year. We think, near term, it was oversold to that extent, just given a couple of seasons which were not pretty good. So now we think that possibly is a place where things can normalize and be better, especially in the durable pocket.
Okay. Christy, always a pleasure speaking with you. Thank you so much for coming in and giving us that perspective.
Thank you.
Okay. What we'll do is slip into a very short break and we'll come back. We'll continue. Numbers were extremely good, but the stock is up 5.5% as well. 11% higher on a VST Industries, 9% higher on a Vari. It's all earnings in terms of the kind of moves that we're seeing. Jio Financial will also come out with numbers at some point. That stock is currently perched up 1% or so in trade. Angel One up 9.5%+ in trade as well. So some very, very decent moves that we're seeing, especially amongst earnings candidates. You've also got the likes of an Apollo Micro, a Kolte Patil up 9.5% in trade. RVNL is up 3% after that order win that it's bagged. And then you've got JSW Steel, which is also up to a couple of percent in trade. Let me go across, in fact, Sajid waiting by with the FNO snapshot. Sajid, give us a perspective. What are the levels one looks out for?
In the last half an hour, 40 minutes, we've seen the index inch up about the 24,300 levels, and with good support coming in from the put writers there, because there's a lot of put writing which is happening at that level, that strike at as we speak. The index up nearly 0.5%, premium at nearly 20 rupees or so, and in the morning we were seeing that index was hovering between positive and negative in terms of premium and discount there. But open interest is up 1%. We're seeing some shorts which is getting covered at slightly higher levels. So as the index moved above that level there, Nifty Bank is up nearly 0.73%. So that's a jump which is coming in the last half an hour, 40 minutes, with open interest up nearly 1% as we speak. Look at what's happening in the Nifty Bank constituents, and HDFC Bank is where we're seeing some long build-up which is coming in 2.36% up in open interest positions. There's a short shorts which are getting added in ICICI Bank and Bank of India. Otherwise, we're seeing some long buys coming in across the board, and some short covering happening in Federal Bank and AU small finance bank there. But options is where the play is happening. 23,300 is where a lot of put writers are now adding positions as we speak. And if you look at the distribution chart, you will see that there is a close correlation to this, because we are seeing activity coming in here and in the 24,300 level, and in the next 1 hour you're going to see that if we are able to hold on to that level, then 24,300 is where the index will inch up and close above that level there. But future gainers includes Angel One, where the stock is up 11.32%. It's one of the active stocks in options as well. Long buying coming in, Colgate and Suzlon and other stocks where we have seen the stocks up 5 and 6% respectively, with longs getting added there. Future losers include stocks like Kalyan Jewel, where there's shorts getting added, HDFC Life after disappointing numbers, which is down nearly 2%, and Wipro is also down nearly 1.73% after disappointing numbers there. Open interest gainers include Godfrey, where we are seeing some long, and look at the open interest position addition, which is there, 57% coming in. Motilal Oswal is also seeing a 35% jump in open interest position with longs getting added, and Cochin Shipyard is also seeing some longs getting added with nearly 20% jump in open interest positions. Among the losers, you have Biocon, where there's a short covering happening. CDSL is also seeing a short covering, and Astral is also seeing a short getting covered as we speak, and open interest down for all these three counters. Look at the most active call, ITC 310 April call. The stock hovering around 310 rupees, not able to pierce that 310 mark despite good open interest in addition of nearly 71 lakh there. Angel One is another stock where there is a activity happening at 320 April call there, with 9.35 lakh contracts getting added, and the stock around 322 as we speak in the futures. Among the put, you have Wipro 200 April put, which is giving some support to the stock at where the futures is around 201 rupees, with 23.8 lakh contracts added in open interest as we speak, and the premium is down just 0.5. Title for 4,440 April put is also one of the most active, which is there, with the strike or the premium down nearly 20, and open interest is up nearly 21,000 there. So the stock at 4,500 odd at this point in time. So it's the activity which is now moved from 24,200 to 24,300, and you'll see that by the end of the day, if the market is going to close positively above that level, you're going to see a lot of put activity coming in, with the put call ratio going above 1 as we speak.
Okay, that's all the FNO action that we're seeing today. 133 points higher for the Nifty futures. Unilever, Nestle, you're seeing some renewed vigor after Tata Consumer's earnings shot up about almost double digits, the stock. Tata Consumer, that is, and some of the big boys as well holding out very well. In fact, I want to check in on what ITC is up to, because this was one of the first movers when we came into trade from within the entire FMCG pack. Not a pure play FMCG for sure, but that stock, along with its other tobacco peers, they're also the ones which are seeing quite a fair bit of traction in today's trading session. VS retailers as well, holding up 11% as we speak right now. In fact, not just tobacco, Godfrey Phillips also 4% higher. Look at what's happening in the entire Alcobev space as well. Today, you're seeing quite a bit of spurt come in, and names like Radico Khaitan as well. The last time I checked, that stock as well holding higher. Quite smartly, Radico Khaitan 5.5% off, an uptick coming in, and that stock sitting on pretty much at the high point of the day. Kunal, tobacco, Alcobev, what would be our big B?
Yeah, from the stock specific front, I think Radico is something which is looking very attractive. In fact, many of the Alcobev stocks, they're actually coming back to their 3-month or 4-month swing high patterns, which is a very encouraging sign, because remember that these stocks had gone through a huge correction, whether it's United Spirits, Global Spirits, United Beverage, etc. These stocks had corrected very sharply. So to see Radico trying to lead, or maybe trying to make a strong comeback, indicates that we are looking at a potential possibility where many of these stocks could start to look attractive. ITC, I'll still maybe just about wait and watch. I think the major part of the rally for ITC could also be on the back of the movement in the entire FMCG sector today. In fact, that's another space which I believe could be a much more preferred bet rather than ITC, because the stock is still trading below its key moving averages as well as resistances. So I think if I have to pick something from the FMCG pack, then I would not prefer ITC at the current levels, but I think Colgate, Dabur, Britannia, HUL, they are the ones which are looking fairly better.
Okay, well, since we're on the subject of some of these tobacco manufacturers as well, VST Tillers, or VST Industries rather, has been soaring on the back of Q4 numbers, with profit jumping more than 2 times. In fact, Snehi is here with an analysis on those numbers.
Well, yes, overall, a good set of numbers coming in from VST Industries. That's the reason the stock is doing very well, and also the reason why the other cigarette players, the company's peers, ITC and Godfrey Phillips, are also seeing gains in today's trading session. But let's come back to VST Industries and break down some of those numbers. On the consolidated year-on-year basis, the revenue has seen a very sharp uptick. If you exclude the excise duty, the revenue is up 31%. If you include the excise duty, it's an uptick of 52% for the revenue at 689 crore rupees. The net profit has seen an uptick of 2.2 times, looking very healthy at 117 crores. EBITDA has seen an uptick of 3 times at 208 crores, and EBITDA margins have also seen an expansion of 1500 bips at 30.2% compared to 15.2% this time last year. Some more highlights from the earnings. The cigarette volume has come in at 667 million units, which is an uptick of 3% on a year-on-year basis. Now, if you break down the revenue further into two of their businesses, the cigarette business has seen a growth of 1.8 times. But on the flip side, the only blip of worry in this earnings is unmanufactured tobacco business that has seen a cut of 50% on a year-on-year basis, and the management attributes this to all the geopolitical instability that we're seeing in the Middle East. They've also declared a dividend of 12 rupees per share, and in terms of management commentary, they say that a challenging year awaits the company given the extraordinary tax increases by the government. Remember, cigarettes now fall under the 40% GST slab, so the company is expecting to see the impact of this playing out in FY27, and they say that they will remain focused on strengthening brand portfolio and in-market execution. So that's a roundup of VST Industries Q4 numbers, looking very solid, and the rub-off impact being seen on its listed peers, ITC as well as Godfrey Phillips.
Thank you so much for that, Snehi. Let me, in fact, switch focus to an ET Now exclusive. The government is stepping up its asset monetization push in the power sector. Sources tell your channel that the Power Ministry recently held a key meeting with stakeholders to finalize projects that could be included under the National Monetization Pipeline 2.0. Listen in.
Well, an important development from the Power Ministry. The sources suggest that the ministry has held an important meeting with stakeholders to finalize assets under National Monetization Pipeline 2.0, a very significant development. In fact, meeting held with the stakeholders such as various departments and PSUs to identify such projects which could be monetized during financial year 2027. In fact, sources also indicate that the issues related to projects to be executed in PPP mode also discussed, and overall projects worth rupees 55,000 crore likely to be monetized during current financial year. A very significant development. In fact, these projects include transmission lines, thermal power generation projects, green energy corridors, and listing of non-core assets, among others. In addition to that, approx 11,000 circuit kilometer of new transmission lines likely to be added in FY27 under Green Corridor Phase 2, whereas approx 20,000 megawatt capacity of new thermal power projects could be part of the monetization plan. You are aware about the fact that the Finance Ministry has already announced National Monetization Pipeline 2.0, wherein it has set a target of rupees 16.72 lakh crore, and the Power Ministry share under National Monetization Pipeline has been set at rupees 2.76 lakh crore.
Really, what's buzzing today is the FMCG pack. You talk about an Asian Paints, the stock's up 1.5%. Nestle, HUL for sure, two of the standout candidates within the Nifty 50 basket as well. Anything changing structurally here?
I think it looks like, because many of these FMCG stocks, they were down and out, or they were beaten down significantly, whether it was like HUL, which is one of the more beaten down stocks, Dabur, which was amongst the worst two performers from the FMCG pack, and then the likes of Colgate, Marico, etc. Now, many of these stocks are making a very strong comeback today. I've not seen 6%, 5% kind of an uptick moves on these FMCG stocks, and that too, it's happening cohesively, and it's happening not with a gap up opening for these names, but even with a mild or soft opening for these stocks. It's throughout the day where you see the stocks showing this kind of a price uptick. So that tells you that this is synchronized buying across the entire FMCG names. Now, there are multiple things which could probably have happened. One is because these sectors were huge underperformers and the markets are just waiting and latching up to different sectors which are into an underperforming zone to try and maybe play a catch up for themselves. There could be a strong genuine buying which could be happening into this pocket, which with an expectation that even if it's a mean reversion play for many of these underperforming FMCG stocks, you might probably come to a point where these stocks may moderate back towards their 50 and their 200 moving averages. I would look at it in this way, that after this strong rally for many of these FMCG names, there should be more room on the upside by at least another margin of 5% to 10% before these stocks land in somewhere in between their respective 50 and their 200 moving averages.
Okay, that's the take coming in on what is sparkling within the entire FMCG space. But Bajaj Consumer, that's one stock which has been flying high after its numbers. Snehi is here to give us more insight on the same.
Well, yes, strong quarter four reported from Bajaj Consumer. Let's try and break down all of those numbers. A strong beat across all fronts. Revenue, EBITDA, PAT and EBITDA margin versus what the street was estimating. The revenue is up 30.5%. The PAT has seen a growth of almost double. EBITDA is also up almost 2.5 times, and it's the EBITDA margins that have outperformed the street expectations by quite a leap, because 23.4% is where the margin has come. This time last year the number was 12.7, so it's an uptick of about 1,060 bips. But other than that, also the street expectation was just 17.7, and it's coming at 23.4, so very big positive on the margins front. Let's talk about some of the segmental highlights. Their HUL, which is their Almond Drops hair oil, has grown in 20s for FY26. There's double-digit volume growth in quarter four after accounting for the MLH reductions that they've undertaken. Their low unit packs like sachet and price point packs grew in 20s in quarter four, and overall 20s growth in FY26 too. And across the portfolio, they've seen market share gains for ADHO. For growth portfolio, it's now above 200 crore rupees. At 225 crore is where their growth portfolio overall stands. More importantly, they have said that they aspire to take this portfolio to 500 crore rupees in the next 3 years, which is almost double in the next 3 years. So that's the aspiration coming in from the company. Its net contribution positive now, with margins growing in single digits for the growth portfolio. So looking very good over here too. Lastly, let's quickly talk about what the channel contribution has been. General trade has outperformed organized trade. We've seen teens growth for this channel in FY26. Rural continues to do well, growth in the 20s for the entire year. Modern trade, e-commerce, quick commerce also continue to do well. Their international business, however, has seen a double-digit decline in FY26, of course, on the back of this geopolitical tension towards the end of the year. Nepal and Bangladesh continue to grow with improvement in profitability. Nepal has broken break-even, but rest of the world and GCC continue to be weak. And lastly, for raw material, they say that liquid paraffin prices rose, but they had enough inventory, so they're not impacted. Copra prices have fallen, so that's a positive for them. And refined mustard oil, it was expected to fall, but it has not fallen to the extent they were expecting it to, so they'll be watchful here. But overall, to sum it up, very, very strong set of numbers coming in from Bajaj Consumer for quarter four.
Okay, thank you so much for that, Snehi. Bajaj Consumer, Kunal, would that chart look interesting to you?
Yeah, in fact, the stock has come back towards a major multi-month high. I think at current levels of 470, 472. Compare this to 2018 highs, where the stock was almost at 525. And the recent low for the stock, which I think the stock had made in the start of 2025 around 150 levels. So I think in that context, the stock has done remarkably well. It's almost like the 6th or the 5th consecutive quarter where the stock has shown an exceptional strong uptick. After this kind of an uptick, it indicates that the stock is now gearing up or heading back towards a breakout of the lifetime high levels of 525.
Okay, let's welcome on board Devang Mehta as well and find out what he's lacking in this market. Devang, hi, great to have you on the show. We were just discussing as to how the entire tobacco and alcobev space has suddenly spurt up. Anything that you're liking here?
Good afternoon, Aisha. Thanks for having me on the show. I think very clearly it's now sector rotation which has started to sort of gain momentum. And what we have seen over the past, I think 15, 20 days is that markets have started to reward individual businesses where there is not only story, but there is earnings, there is cash flows, and also most importantly, I think commentaries for a lot of managements who announced their initial sort of updates have been good, and some numbers have also been good. So my sense that consumption space, and I've been talking about this, be it discretionary, be it non-discretionary, I think there was a lot of re-rating that was on the cards for such type of companies that has started to play out. Most of these companies either have seen their margin expansion, some of the companies have seen their volume sort of expand, and that's why I think this rally we are seeing, right? So generally we have seen capex or manufacturing or engineering or even banking doing well initially, but now I think the rally is transmitting down to certain sectors which were so-called defensives earlier. But now I think after a 2, 3, 4 year of hibernation for a lot of such businesses, I think they are coming back to the fore.
Devang, therefore, what should your current portfolio positioning look like if you were to be deploying fresh money today? What is it that you would focus on? Obviously, now for those who have missed the rally between 22,300 to 24,300, what should now the opportunity look like?
Yes, I think very clearly, as you rightly said, nowadays probably it's extremely difficult to time the markets because it's normally gap ups and gap downs. The last 2-3 months we have witnessed that. So now, yes, coming back to the point of people who probably have missed out the first 2,000 points on the Nifty, it's okay. I think clearly some people wanted a little bit of more clarity before they come. The portfolio positioning can be in three aspects, in three themes particularly. The first theme being very clearly I talk about financialization as one theme, and here you can look out for certain private banks, certain NBFCs, also financial market candidates, and we have been talking on your channel, I think quite a few times we have talked about wealth managers, brokers, intermediaries, AMCs, exchanges. I think this will be first part of the portfolio. Second part being the capital expenditure segment, where we talk about capital good companies, engineering, manufacturing type of air compression companies, HVDC, power ancillary. This is the second part of the portfolio that we recommend to our clients and investors. The third being a little bit of a combination of discretionary and non-discretionary consumption. Discretionary consumption, particularly more so via autos, passenger vehicles, and maybe a little bit of two-wheelers, where last 6 months you have seen enough momentum being generated not only by GST, but also I think the per capita consumption of vehicles being low in India, that is also sort of bounced back. So my sense that the three themes, if you try and buy in the portfolio or accumulate in the portfolio, I think probably you are going to do very well for the next 2-3 years.
Okay. On that note, let's take a quick break. Lots more stocks to discuss, but on the other side.
We'll have HDFC Bank, where you're expected to see expansion with regard to NIM, around 4 to 5 basis point NIM expansion. They've already come out with their growth numbers, so no concerns there. But really, the average quarterly balances with regard to deposits will be crucial to understand, because what we've seen is that that has not expanded as much as the loan growth has. And therefore, there might be some bit of pessimism around loan to deposit ratio and the deposit growth number really sustaining into April, May and June of 2026, which is Q1 FY27. That will be the one crucial piece with regard to HDFC Bank that we'll be monitoring. The other piece is obviously the loan growth as well as the EPS growth that most analysts will be trying to track for FY27. Hopefully, this time around, FY27 could post a double-digit EPS growth. If that is so, then that will be a crucial positive. And on the kind of base that HDFC Bank has, loan growth, should also hold the key, because if they've done around 12% loan growth for FY26, if they can ramp that up, then that will mean that there is confidence which comes back for HDFC Bank. So those are the kinds of positives that we're penciling in. In terms of credit costs, no concerns. NPA ratios will largely be contained. No concerns with regard to asset quality. But of course, there will be questions, excuse me, around the fact that if the West Asian war were to get pushed through, would there be any concerns with regard to system level credit? And that is something that we will again monitor when the commentary comes out from HDFC as well as ICICI Bank. ICICI Bank also largely in line, no concerns from an operations standpoint. There you go, those numbers on your screen. Margins for ICICI contract by 5 bips or thereabouts. 4.25% is where the net interest margin number is penciled in at, but ICICI Bank does have the tendency to surprise on the upside, both on margins and credit costs. Credit costs for Q3 was elevated, so it surprised actually on the downside, if I can call it that. But again, we're expecting to see a credit cost normalization this quarter, and maybe an upside surprise, if at all that were to come, that will show or reflect positively with regard to profitability as well. Profits are expected flat on a YOY basis and up around 12% sequentially because of that elevated 1,000 crore extra credit costs which they had to build in last quarter, 1,200 crore odd that they had to build in last quarter. So that's really the flavor with regard to both HDFC and ICICI. Devang, the large cap banks, is that where the value pocket continues to be? And how do you compare them with some of the PSU banks? Because growth in PSU banks has been sharper. They've to a large extent outperformed as well. There's a recovery pipeline at play, which is also playing out well. Credit costs are benign, and just the growth and the temperament with which they're giving their guidances is extremely strong. So would that be the pocket and relatively undervalued versus large cap, or would large cap private sector banks still be that pocket of which you believe will outperform maybe over the next 2 years?
I think yes, excellent question. So maybe there's a trade-off between maybe valuation growth or how you view the underperformance of a private sector banks. Most of the private sector banks, if I can say, over the last couple of years, where PSU banks have sort of started to outperform. And of course, you always know that they trade at a valuations of price to adjusted book value much which are below the private sector peers. So now here, I think most importantly, the large banks typically are not recommending, but taking names like HDFC or ICICI or Axis look very good. Ideally, I think why these banks have not done well, or why certain large banking candidates have not done well, I think that's clear. FII selling, which was visible. Most of the high-ranking FIIs probably have most of the holdings in India's largest businesses, right? So they would have a largest holding in banks as well. So I think one reason to explain the underperformance is this. Having said that, I think there is a little bit of a zing in the commentary of these banks and operating performance over the last 2 quarters if one looks at very closely. And maybe most importantly, rather than the operating performance, people want to look at the commentary of all these managements, that how they are confident for credit growth. Is deposit growth also getting momentum, loan advances? I think all these things are monitorable. But to me, PSU banks had a dream run up over the last 2 years. From here on, the next 2 years, I think there is a decent probability that private sector banks can outperform PSU peers.
We've often talked about banks, SBI or ICICI Bank, if you really had to make that pick, or something else.
I think out of the two, I'll still prefer SBI at the current juncture, because that's a far more cleaner chart. The stock establishing its leadership quality at the current juncture, as well as over the last, I think, 6 months, specifically in the second half of 2025, I think was a sort of a revolution for the entire PSU banking names, where the stock itself managed to lead the charge for the entire sector. So you don't get to see such kind of leadership quality in such a clean manner for stock prices. And historically, whenever that has happened, after a phase of pause, which was in the case of the last 2-3 months, where the PSU banking stocks have taken a bit of a profit booking mode, I think these stocks make a very strong comeback. So I think in that anticipation, SBI looks to be a far stronger stock compared to ICICI Bank.
Okay, that's SBI that Kunal prefers. And Kunal, any of the smaller PSBs?
Yeah, I think from the smaller PSU names, I think Canara Bank is something which is looking extremely attractive. Bank of India, apparently the stock has not yet confirmed a breakout, but that's a high potential stock on the upside. My sense is that the stock could be getting up back to that 155 to maybe even 165 plus kind of a breakout zone for itself. Over the near term, names like IDBI Bank, that's another name which I think could probably make a V-shaped recovery. for itself. So there are a lot many stocks over here from the mid-cap end, which is looking attractive in the PSU banks.
Angel One, Kunal, curious to know, because that move, I mean, it's been a very strong move today as well, and that's on the back of earnings to some extent. But give us a sense, where do you see an Angel One, a BSE, some of the capital market plays on charts right now?
You know, Angel One, I'll look at it this way, Harsh, that 2023 start, 23 end, 24 start is where the stock had topped out. That was around adjusted price of 375, 380 for Angel One. And for the subsequent last 7-8 quarters, you know, the stock was a huge underperformer. In fact, at one point, the stock had corrected almost 45 to 50%, coming back to the 200-ish kind of levels. So I think I would sense that this could be a big breakout for Angel One on the long-term charts. But after today's move of 9-10%, it looks like that maybe short-term wise, the stock is a little overbought. So I'll wait for marginal corrections to enter. I think today also there was a point when the stock was, it opened up on a higher side, went down to, I think, its day's low, where it was just 1% or 1.5% on the positive side. And from there managed to pick up pace to try and close it to this double-digit gain. So I think waiting for a mild dip over here could be a better strategy.
Okay, that's the take coming in right now on what is the chart of Angel One actually indicating. But you know, the entire capital markets pool has been quite robust. In fact, we chatted with Gautam Dugar earlier this week, and he was also mentioning that, you know, even though the brokerage players have been facing a lot of regulatory pressure, he still remains very bullish on the entire capital markets play.
We've been very bullish on capital market theme for the last 3 years. If you look at our model portfolio, we've had variety of AMCs. We've now added ICICI Prudential, which has recently got listed, and we've initiated coverage there. But look, in our model portfolio, typically we'll have 34, 35 stocks. But if you have to really play the capital market theme in India, and we remain extremely bullish there from a next 5 to 10 year perspective, I think the right way to construct a portfolio of a capital market is to create a basket of one broker, one exchange, one wealth manager, one asset management company, and maybe a couple of intermediaries. And that's how you benefit from the whole ecosystem. We've seen variety and multitude of pressures coming in from regulator. There are a whole host. I mean, if you sit down and jot the announcements which have happened over the last 2 years on F&O, on brokerages, variety of things pertaining to AMCs and capital markets, I mean, a lot of actions has already taken place, and you know, the industry has seen through it all. Do remember, I represent a brokerage, which is a listed company. So, you know, ample disclosures in place. But what I'm telling you is, look at this space beyond next 3-6 months. The regulations will keep changing. A regulator will keep reacting to the evolving developments. Wherever they want to curtail the extra enthusiasm or exuberance, they're right in doing that, so that the industry keeps growing on a compounding basis over a period of time rather than getting heated up too fast too soon. And therefore, that's welcome.
Okay, that's the rationale behind why the entire capital markets play is looking all that interesting. But just looking at metals as well, they too have been seeing traction off late in any case. So today it's JSW Steel, which has sprung up quite nicely. There are other names like Suzlon, for instance, which have jumped up about 5.5%. Pidilite has made a move of about almost 5%. And DMAR as well has sprung up about almost 4.6% as we speak. Devang, do you have as much comfort now for the SMIDs, or still recommending safer bets with large caps?
Honestly, we generally have been more on the SMIDs, and to be very honest, yes, there was a tough time probably the last 1 or 2 months. Maybe Feb was a fabulous month, but March was a tough month, of course, for all the large caps as well as mid and small. But I think the recovery that we have seen in particularly the last 2-3 months, barring March, has been spectacular. And why I keep on saying that, while I always discuss about the market cap of India, there's a roughly around 440 lakh of market cap, 440 lakh crore of market cap. I think there are still a lot of companies below that 1 lakh crore, the 10, 20, 30, 40, 50,000 crore market cap, and even below 10,000 crore if somebody's risk appetite helps him to be in that segment. And there are these businesses which are high ROIC businesses. These are companies which are growing at a steady revenue, EBITDA and PAT margins. There is opportunity size which are huge. for a lot of small and mid-cap companies. I think if you look at the Nifty construction of Nifty, 35% being financials, 15%, roughly 14-15% being IT, around 10-12% being oil and gas, 7-8% being FMCG. There are a lot of ideas out of the index which you will always find in mid and small cap space, which are sort of getting ready to get into the next Nifty or Nifty over the next 2-3 years. So my sense that a lot of opportunities, if you are in India, it's great that you will have a lot of opportunities in mid and small cap spaces. Yes, you can't paint it with the same brush. There are great companies, good companies, and gruesome companies. So you need to be in great and good companies.
What about the cigarette stocks, Devang? I wonder what your view there is, because in fact, we also had the management of VST Industries speak with ET now. I'll quickly take you through that commentary. FY26 volumes was slightly ahead of what the industry growth was. It's too early to assess the impact of excise changes as of now, is what management has said. FY27 likely to be a challenging year due to the sharp tax hike. They're trying to balance volumes and margins. Calibrated price hikes have been taken across brands. There are going to be clearer trends expected over the next 2 quarters. So largely cautious, but despite that, you're seeing very strong numbers and that stock move as well. Devang, how would you view it?
Exactly. So this is what I was talking about in the previous question, that why a lot of mid and small cap businesses have started to do well, and VST is one of them. Again, not tracking it closely, so will not be appropriate to comment exactly on the same business or stock. But most importantly, most of these companies have underperformed for the larger part of the last couple of years. Consumer businesses, be it tobacco businesses or a lot of such consumer-facing businesses, or pure play consumption companies like the HULs of the world have underperformed. I'm no way saying that they'll come out and outperform, but there is a little bit of a arbitrage opportunity or a value which lies over there. And by no means the valuations are cheap. But at some point, while your volumes are growing or your margins are growing, market would tend to put some of its sort of ammunition over there. And that is where I think people will see that there is a bit of an arbitrage and make money. But as I said, not convinced enough to buy these companies for the next 2-3 years. There can be at best decent trading bets. But as I said, the sectors that we like are more capex, more financialization, and more discretionary consumption type of companies.
Okay, in fact, just earlier today, we were chatting with consulting editor Itina Swaminathan Iyer as well, outlining that, India is likely to see a hike in prices post-election and a rise in fiscal deficit as well. He, of course, believes that the RBI must refrain from rate cuts to maintain the fiscal stability.
They have the leeway politically. I think politically, the BJP, the NDA is very strong right now. Even if it does not do very well in West Bengal, Kerala, it doesn't matter. So I think BJP is sufficiently strong politically, so it can afford to go for a significant rise in the fiscal deficit. It can also afford to inflict pain. I mean, this business of not increasing petrol and diesel prices, I mean, without doubt, that will have to be done. It will surely happen after the elections. I think everybody agrees that Mr. Modi is not one for infinite subsidies. He has always been very clear that where to rein in the subsidies. So I think we can look forward to very significant increases in prices of many things once the elections are over. And even despite that, there will be a significant hit to the fiscal deficit. I wouldn't be surprised if it exceeds instead of 4 point whatever it is, 4, if it's 5.5 for 1 year, I would not be surprised. And in these circumstances, as I said, I do not think the RBI should be in the business of cutting rates. Quite the contrary, perhaps. The prices have shot up in the case of petrol by about 33% and diesel about 25% in the USA. This has directly hit the consumer on the car, and it is gradually affecting transport costs, the cost of all petrochemicals, plastics, the entire logistics, everything is the aluminum has shot up, the natural gas. So many things have gone up. The Gulf has been critical, not just for oil. It equally, they're an important producer of aluminum, of a number of petrochemicals, of a number of plastics, helium. So I foresee that this particular problem that has hit us, and is capable of becoming very serious if it continues. I foresee that this will end fairly soon.
Okay. Now, Devang, let me come to you with regard to Jubilant Food. What's the take there? We had a Morgan Stanley note earlier this morning which has downgraded the stock equal weight. So it's not a downgrade to a sell, but it's a downgrade to equal weight. Your take with regard to all that's playing out in QSR?
You're a fan of QSR and this type of this is of course a QSR, but even certain platform companies which are there, and some of these companies still burn cash, not of course Jubilant, but I think a lot of parameters are now sort of coming to the fore when you look at such companies, and also a lot of competition also, though this can be a market leader, but even in a localized way, when you look at a lot of geographies, I think there are competitors emerging which are actually competing very hard. So for a same store type sales growth, or for same outlet type sales growth, it will require a lot of effort or a lot of marketing effort from this company. So yes, at some point it will be a value, but my sense that there are a lot better opportunities in the travel space, the hotel industry itself. Yes, the tourism industry itself, after a bit of hibernation for last 1 month, starts looking attractive as probably peace prevails and better sense prevails. I think that looks more interesting. The hotel space, the likes of hotels where ARRs are also rising and a lot of operational efficiencies has come to the fore, and no more are the companies sort of burning cash in terms of buying land, and they are only managing the properties. So I think that space looks more interesting than the space that we talked about.
Okay, that's the take coming in right now. In the meantime, the other intriguing part has been with the markets trying to now navigate all this volatility and recovering the way they have in the last 2 weeks amid the West Asia crisis still ongoing. How is it that marquee investors have rejigged their portfolios? The likes of Vijay Kedia, Purin Juveliyat, they've added a few new stocks to their portfolios. Ashesha is here with that insight.
Several marquee investors have rejigged their portfolios in the quarter gone by, so we decided to take stock of a few of them. First up, let's put the spotlight on Rekha Jhunjhunwala, and she has increased her stake in Metro Brands. It earlier stood at 9.6%, which has now been increased to 14.4% as on the 31st of March 2026, which means that she has increased her stake in this counter by as much as 4.8%. The second one is Raghav Productivity, and there she has lowered her stake. Now her shareholding stands at 4.4%, which means she has lowered her stake by 0.4% in the January to March quarter. Let's also put the spotlight on a couple of other marquee investors then. Purin Juveliyat, his holding in Orient Bell now stands at 5%, which means on a sequential basis in the January to March quarter, he has increased its shareholding by 0.1%, and so is the case with Ansal Buildwell. Holding now stands at 2.8%, an increase of about 0.1% in the January to March quarter. Shifting focus then to another renowned investor, and that is Vijay Kedia. Precision Camshafts, that's the name of the share. That's the name of the stock, where the holding now stands at 1.1% versus negligible earlier, which means this is a complete fresh addition that he has done to his portfolio, or the shareholding was below that 1% mark, and now the shareholding stands at 1.1%. Let's also talk about a couple of other investors then. Anil Kumar Goyal, Kamath Hotels, holding now stands at 3.3%. A 2% increase in stake is what he has done. KRBL holding now at 4.8%, an increase of 0.3% in the January to March quarter. And Sport King holding now stands at 5%, an increase of a marginal 0.3% that he has done in the quarter gone by. Lastly, let's also talk about Nemish S. Shah, where Zodiac Clothing, he has reduced his stake by 0.1%, and the holding now stands at 1.5%. So several changes that have been done by these marquee investors in the quarter gone by, especially at a time like this when markets were very volatile.
Devang, any of the mid or small caps in particular that are interesting you? I know we talked about that, but any themes in particular?
Aisha, I can mention certain themes, of course. So one of the theme that we used to play and that has become large cap is HVDC, and I'll not stress much on that. But there are certain themes which we probably like a lot during this period. There is one theme that I used to talk about some time back, the air compression or the air solutions theme. There are only 3 listed players here. If you look at Ingersoll Rand, Kirloskar Pneumatic, and LG Equipment, only 3 companies, and the industry itself is quite small. Probably from here on, I think the industry opportunity or the size of the opportunity itself can be 3 to 4x, if not more. I think ideally it's 6, 7, but I'm being a little more conservative here because air compression, air solutions is required everywhere. And most of these companies have return ratios above 25, 30, 35%. And most of these companies have also sort of completed their capex and are at an inflection point. So this is one sector in the typical mid and small universe where we sort of like such businesses. We also like engineering, manufacturing type of businesses, which again can be a big industry. There are cryogenic equipment companies, the likes of Inox India or Linde. These are companies which probably will be required whenever you want logistic solutions for something which is -100 to +100 temperature, 100 degrees Celsius temperature. So I think these are very core businesses. Of course, market will realize this at a later point when probably a lot of momentum comes into the market via FIIs as well as domestic putting in a lot more money. But these are themes one should not miss if somebody is for the next 3, 4, 5 years.
Okay, very interesting themes coming in there from the mid and small caps. But guess what? Gold, that continues to be a evergreen theme. And ahead of Akshay Tritiya, let's take a look at what the demand trends are for the yellow metal and whether there's been any aberration coming in there with the upcoming wedding season, keeping the prices elevated. Is that really what's happening on ground? Ashesha spoke with the store manager of Tanish here in Mumbai. Let's get a pulse check.
We see a very strong customer behavior towards Akshay Tritiya. The intent is very, very high, and we expect the customers to come. And there have been good advance booking that we have been seeing for this Akshay Tritiya. One of the trends that we've seen is that customers are moving more towards the lightweight jewelry, more affordable jewelry for the daily wear. And hence, with the fluctuating gold rate that we see, that's been some of the trend that we are seeing. There is also wedding season that is there, the summer wedding season as we call it, and we are seeing a strong even purchase for that also. People are trying to prepone their purchases, even for the wedding shopping. So we are seeing a very, very strong trend this time around.
Right. So as compared to last year, if you can, I understand you can't give a number, but directionally, has it been much better than what we had seen last year?
It has been much, much better than what has been, since last year. And we see that as a customer, they are seeing jewelry not only as an investment, but they're also seeing this as more of doing, their daily wear use. And for their, it's more like a wearable that they are trying to use it rather than just an investment. So right now I see women being more smart in their choices when it comes to jewelry. They are also looking at, this jewelry as how they can use the jewelry not only for bigger occasions, but also for the daily wear use.
Right.
Okay, that's the pulse. And it doesn't seem like the prices are really deterring the demand at all when it comes to gold ahead of the festival of Akshay Tritiya. But that's, of course, Titan in trade for you. The other retailer stocks as well holding out quite okay, although Titan has had a little bit of a volatile chart. But Devang, if I could just come to you, how is it that you're approaching some of these jewelry retailers amidst these prices of gold?
Yeah, I think one of the top favorite, and as I said, I'm not recommending anything, has been Titan, the one we were talking about just a minute back. I think that's very interesting. The company showed a huge correction, I think if I'm not wrong, a month back, and how it has recovered. The business update was extremely strong, and I think there is no reason the numbers will not be strong. It's just been a revelation over the past few years how the company has delivered even in the worst times, right? You remember COVID, when there was a large carnage and a price correction, how the company rose to the occasion and how there was a lot of demand which came in and made it to be brilliant. Why we like this type of companies? Because of the diversification. Of course, the majority of the revenues come from the jewelry segment where it is trusted, a huge trust has been built with the consumers. But along with it, the other businesses, be it eyewear, be it the sari business or the traditional businesses which they are getting into, and some new age businesses also probably are going to get into. So my sense the company is doing enough and more to sort of diversify not only the stores but also the value proposition which it defines. So I think in such type of companies, if you be with the market leader, I think that's a smart strategy to be.
Okay, 3 minutes left to go before we wind down for the day and the week. And it's been a good one this week, actually. You know, what actually started off as a rebound last week only gained further traction this week. And guess what? I mean, who would have thought last week that we'll be back at those 24,375 levels on the Nifty futures? And what's good to see is that the broader market is now beginning to participate. What started off with a large cap-led move, now you're seeing that churn and rotation within mid and small caps as well. And that's the heartening sign. At least for the last 2 days, it's actually the breadth or the broader end of the market which is even outperforming the benchmark indexes. And that really is a very, very healthy sign. Today, of course, the laggards have been L&T, which has not done a whole lot. M&M has been a little bit soft. Bajaj Auto, HDFC Life, Wipro reacted to their numbers. But the consumption end of the market has come back to the fore. Power, finance, infrastructure, cap goods, metals, those are the sectors which really came to the lead today. And a lot of broader market participants, a DMart, a Suzlon, Angel One, Colgate, HDFC AMC, these are the names which have really sprung up. So at least for the last 2 trading sessions, the top movers are a completely newer set pretty much on a daily basis. And I think that is a very, very healthy sign. Of course, there have been casualties today other than HDFC Life and Wipro as well. Sun Pharma lost about 1%. Swiggy was down about 1.5%. Kalyan Jewellers was down, while of course Titan held out like we just flagged off. But that was not the case with the rest of the market. Kunal, do you sense that this trend is going to continue come next week as well, wherein the churn in the broader market and the action in the broader market is going to be higher than the benchmarks?
Yeah, it should be, because when we look at this is a classical rally. Why? Because the large caps have underperformed. So Nifty is up 10%. The Nifty mid-cap index, I think the last I remember was around 16% or 17% gain from the recent lows. And the small caps have moved up by 22 to 23% approximately from their recent swing lows. So it's a classical rally in play, because mid caps and small caps, they generally are the ones which have a high confidence and a high beta rally. So I think in that prospect, I would expect that this trend would continue for the next week also.
Okay, we're closing the week, and when you're looking at the Nifty, Kunal, thank you so much, by the way. Devang, thank you as well. We'll let both of you go. When we're looking